Bitcoin is trading at $108,000 and I believe the top could be in or very, very close. So in this video, I'm going to give you the bearish case or the arguments here to look for. And I'm also going to give you a short setup that has a number of potential pieces of confluence to it. And again, a lot of this is based on data. So we will also look, of course, for invalidation levels if this short scenario or this bearish case is possibly invalid and where it is invalidated. So before we begin, if you do trade cryptocurrencies with leverage and you are not yet using BLOFIN exchange, check them out. They are my preferred exchange personally. I do have a referral link down in the description below. If you use that, because I'm so close with BLOFIN, I've met the CEO personally. I go to their events in Dubai and Singapore, and I have that relationship with them, which means I'm able to leverage that for you guys and be able to get as much bonuses and cashback campaigns and giveaways as possible. Like right now, we have up to a $9,400 cashback campaign running for anyone who's signed up with my link and trades. If you hit the required volume, you can get 9,400 back in USDT. We regularly give away iPhones, even MacBooks, and that is just part of the perks of if you sign up and trade there. Besides, it is a really good exchange, a good platform, and I think they're really working their way up to becoming one of the top exchanges over time. So if you haven't checked them out, check them out. The link is in the description down below. Use my link to sign up and you will be able to be eligible for all those bonuses. So let's backtrack a little bit. We go back to the beginning of April when Bitcoin hit $75,000. And this point in time here, this is a 4-hourly chart, but that doesn't really matter. At this point in time, when Bitcoin hit 74,000, we had a daily RSI divergence, bullish one. And as a result, we got a massive run from that. This was also the point that 74,000, it was the 50-week moving average, which is the line in the sand for the bull or the bear market. And they defended it, and we got the scam pump. Now we are here. We ran all the way up. And as you can see on this chart, it is a very defined range. Okay, so we have a high. This was the all-time high before the dump. Then we had the dump, and that makes the range. Now look perfectly. This dotted line is 50% of that range. Look perfectly how that has been respected, right? Over here, both from the downside, from the upside. Once we broke above it here, it basically shot above here and went straight to the top. Now, we have swept this high over here, but we are back in the range. Now, how ranges tend to work is that both sides of the range end up getting swept, which means the price goes above and then below, or vice versa. So, usually what works in a range setup is once it sweeps the top after defining this range, now the low is not swept, which means there is a chance if this range setup plays out, we sweep the low, we get back inside, to go all the way back down and sweep the lows. Okay, that is the potential here with a range setup. Now, that is one of the things we can look at. You can also look at this as being Wyckoff. So, if we look at Wyckoff as a distribution schematic, we have to keep an eye on this also, which means that you can always label it however you want, and only in hindsight are you going to be able to get the perfect answer. But so far, we do have a potential Wyckoff distribution in the making where we hit the buyer's climax, we have the automatic reaction, the drop after it peaked, another reaction back up but lower, then the sign of weakness breaking down below the automatic reaction, then going up again, UTAD, right, the up thrust over here. And then sometimes we can have a third one, which means it goes down again. It makes one more higher high, and then it drops, which is basically a pattern you will see on all charts ranging from the 1-minute chart all the way up to the weekly chart. It tends to be these three thrusts, which is the buyer's climax, the up thrust, and the UTAD. And that happens a lot. Like, we can go back to the chart. Let me show you this so I can try and keep this all as logical as possible. Like, a good example was the previous cycle in 2021. You can see this in action very clearly. This was Wyckoff distribution, this whole thing. And you can see we had a buyer's climax, we had a drop, we had the up thrust, and then we had UTAD. So 1, 2, and 3, and then distribution and down. Okay, so we might be seeing this in action, and this might be what is playing out over here. We might be able to say that this whole thing, what is happening here now, is distribution, and that it's hard to say over here, is this 1, 2, and 3, or is this 1, the buyer's climax, to the up thrust, and 3, are we going to go down again, one more high, and then down? Those are possibilities, but this is what we're looking at right now in terms of just purely technicals on the chart. Now, number one, what we have to see is we are now below in the range. As long as we're below in this range, this is all in play, and it leans towards the bearish side. Of course, once we get back above here, then as long as we are above here, it's still a bullish trend and it could still continue, right? But these are the conditions. So we are now below the range high, below this high, and that means that we could technically drop here, at least even till mid-range, then maybe make a higher high, and then drop. These are all possibilities we have to factor in. Now, what we add into this mix, besides the technical charts, is a number of factors. Number one is we have the fear and greed reading being at 78 extreme greed. That is not something that you see at bottoms or in the middle of moves. That is what you see towards the end. Now, could it go higher? Could it go to 80, 81, 82? Yes. Could it stay there for a couple days or a week or 2 weeks? Yes. So that by itself does not necessarily mean that we have reached the exact peak now, but I believe that it does warn that we are getting close within a window of maybe 2 or 3 weeks, if that doesn't have a significant pullback or cool down. Okay, that is the first factor. Then factor number two is we are now approaching the end of May. Historically, towards the end of May, after May, we have had corrections or periods of chop. It is very unlikely that we see a continuation based on previous data in the months of June to August. Okay, and then add in the fact that we have bearish RSI divergences, and you will be able to see why there is a lot of technical and just sentiment argument for a bearish case here. So you can see over here, this was the previous cycle top. We're on a daily chart here. Bearish RSI divergence on the daily chart. Higher high. It's the same thing that's happening now. You can see it swept the previous high just a little bit, went below, and then we started our bear market. Similar thing is happening right here, right now. Okay, we have the bearish RSI divergence, as you can see on the daily chart. Guys, on the daily chart, we have so far a little bit swept the high, and we are now potentially in this exact position. Now, again, like I said, there could be one more high. They do trick you with this stuff. Okay, sometimes it's not as simple as just a deviation above and then straight drop back down. It's a possibility, but you also get the chance where it goes back down, then it goes back up, and then it goes back down again also, right? So that is what we have to watch out for. But either way, I think it favors, the data favors at this point in time, in my opinion, us being close to a top. Either the top is in at 112, but 112 to 120, somewhere around this window for a potential top of this entire market cycle, because we already had a bearish divergence between this peak and this one, and we had this drop, and now we have one more scam pump with even more of a divergence. In my opinion, this is just a matter of time before this plays out. It is even present on the weekly chart. So you can see here, guys, this is a weekly chart, the same divergence. It was present in the previous cycle that marked the top, right over here. It is still present right now. So we have a daily divergence, we have a 3-day divergence, we have a weekly RSI divergence here on this pump. We had a sweep of the high, drop back into the range. We have extreme greed readings. All these things line up to what is, in my opinion, this whole thing is a distribution move, a scam pump, and I think we're getting close to the top of the market, at least for a major correction like we saw here. Keep in mind, guys, last bull cycle, also, this was May, right? After May, sell in May, look what happened, 50% drop. So all those things together, I think we either get something like this over the next couple of months, nice big drop back down, which might give us an opportunity for another run towards the end of the year, but maybe it is the complete top of the cycle and we continue going way down. Once we lose the 50-week moving average, that's when I officially call bear market. Until then, we have some room, but obviously the higher up you can catch the reversal, the better it's going to be. So that brings me to the short setup that I want to share with you. And again, if you are going to trade crypto with futures, with leverage, number one, keep in mind that you can get liquidated with leverage. So you always have to have your risk management set up, which means you can't go all in with your entire trading account. Usually good practice is 1 to 2% risk of your trading account per trade. If you're feeling a bit more confident or you want to take a bit higher risk, you can go 5 or 10% and take a shot at that. But that's pretty much the maximum you should be risking on leverage if you are trading carefully. Now, if you are trading, use BLOFIN for trading. I think it's a great exchange. The link in my description down below. If this short works out for you, you could make a lot of money. But obviously, at your own risk, it's never guaranteed because it could get stopped out. And that's why you limit your risk per trade. So this is what I'm looking for. What we have over here, big picture. This is a 15-minute chart. You can see the range that I have drawn on this chart. Range high, the previous all-time high, middle of the range, and bottom of the range, the 74,000 that we were at recently. We swept the high over here recently. That's what I talked about yesterday in the last 48 hours, and we dropped back below. Now, if you zoom in on the lower time frames, which is always key to get the best type of entry, what I believe we could be seeing here is we might have created a smaller range based on this low to this reaction high. Okay, so what that means is that we have a range within a range, and as you can see, we swept this low, which means that we could probably test it, and if this range is valid, we might retest or sweep these highs of this mini range. But this exact sweep would be confluence of retesting the range high that we have, the bigger one, right? So there is that confluence. We sweep the smaller range high. We retest the larger range, which it often does. We have this fair value gap over here where it basically gapped down. And it is in confluence with the Fibonacci golden pocket of the drop from high to low. So there is a lot of confluence here, which makes this the most ideal place where I'd want to take a short, like a big swing short, as you can see, because the idea here is that this short, if this whole thesis that I laid out for you in this video, if that plays out, the idea is that this short is going to take us all the way back down to the mid-range, which is around $92,000, but potentially even all the way back down to 74,000. So even back to mid-range, it is almost a 1 to 10 risk reward, meaning if you risk 1,000, you can make 10,000 when you're right. And that is why I like these kind of trades, is because sometimes you'll be wrong, yes, and you get stopped out and you lose your 1,000. But even if you're wrong 5 times, if you're right on the 6th time, you're still wildly profitable because you've lost 5, but you make 10. So that is simply what I'm looking at personally for my short here. So around about just before 110,000, when we retest that range high to take the entry short, the stop should be at the previous high, so 112,000, call it that. And then the target would be the middle of the range in the 92,000s. So this is what I have right now. This is how I see the markets. I've explained to you why I'm bearish based on data, based on charts, based on technicals. And of course, there's always a chance, could be wrong, right? Maybe everyone steps in, maybe Saylor pulls 20 billion out of his back pocket and pumps Bitcoin more, but this is what I believe is a high probability, and risk is managed if a short is taken. So this is what I'm sharing with you. Let me know what you think in the comments. If you do trade, sign up on BLOFIN, use the link in the description down below, and I'll see you in the next video.